Hello, hello. Hi, everyone. Can you guys hear me? Anybody out there? All right. So first, I just wanted to say thanks for joining. I know some people will be able to join in the chat live. I know some people will not be able to. Hey, Money Coach Malika. Hey, Sustainable Staff. Thank you. Thanks for joining. So yeah, I know some people won't be able to catch it right now, but you'll catch it on the replay. So I just wanted to start by saying thank you to the replay joiners for joining. I'm really thinking we're going to have a fun conversation tonight, and I think everybody can benefit a little bit from this. So let me start off. Who am I? Right. So my name is Kelly Peart, and I am a local real estate broker here in Tampa, Florida. I have been here in the Tampa, Florida, living here in the Tampa, Florida area for the past 20 plus years. I think I'm somewhere at 23 years, 22, don't count me there. Let's go with 20 years. I think that's easier, right? But yeah, so I've been here for a little bit now. And I also went off and got myself a real estate license, right? I have a passion of being able to share my city with others. I enjoy working with out of state buyers and local sellers. And so that is a lot of what I do. And I feel like I'm hearing some of the same stuff when it comes to interest rates. And so I think it's time that we have a conversation about it and just discuss, what actually happens with interest rates, what's taking place, and why, when you're purchasing a home, sometimes they don't really matter. And so as we go through, you guys are going to see me look down. I have some notes, right? Because this is important. I want to make sure I kind of cover the different pieces that I've put together. But, the conventional wisdom is always about interest rates. And so I want to make sure that if you are thinking about it, if you're on the fence, if you're someone who's renting, if you're someone who's planning to move and then rent, I just want you to have a full picture. So that's the goal of today's talk. So yeah, so let's get to it. All right. So the first thing that I wanted to, why am I saying interest rates don't matter? Let's start there, right? So if you are purchasing, let's say you're purchasing 5 years ago, right? So everybody gets very excited about, like the 2018 time period, 2019, when home prices were cheaper. So for example, here in the Tampa market, the average home price back then was somewhere around $204,000. So back then, that $204,000 would be able to purchase you a 1,500 square foot, give or take, home. And I would say 3 bedrooms, 2 bathrooms, right? And back then, your interest rates were pretty low, somewhere in the threes, roughly, right? Obviously, always depends on your financial profile, right? I'm not a financial advisor, for the record. And just FYI, you guys are going to hear my dogs in the back. I'm a dog lover. You've probably seen that on my channel. I have a mini Bernedoodle and a Wheaton Terrier. So if you hear them, they're barking at the neighbors. How dare the neighbors walk on their front lawn? But anyway, but yeah, so one of the things that you'll find quite often is people will compare back to 2008. So if I take that exact same home from 2008 and I am selling that exact same home right now in this current, June 2023 market, that same house is going to have an average price of 400,000, and the interest rate on that will be about double, I would say. I think double is a fair number, right? And be in the sixes, right? Somewhere in the sixes is generally where you'll end up. So there's always the concern of, oh my gosh, what if I sign on to a higher interest rate? I won't be able to afford as much home, that kind of thing. So what I'll say as it regards to that, so it doesn't matter from a few points. There are some monetary points why it doesn't matter. But then you'll also find that some of it has to do with just your overall happiness, right? So if you are looking into purchasing a home, chances are you're probably renting, right? And there are some pain points that come with that, and so we'll touch on those. The first thing that I think you should think about is when I look at that home and I look at the difference in the interest rate, you will qualify for a home based upon the current interest rates and the pricing in the current market, right? So sometimes you'll hear people say like, "Oh, the Fannie Mae, limit just went up by 200,000." I'll give you a rough number, right? 200,000. Well, it did that because Fannie Mae is adjusting for the fact that the home prices have changed. So just like I said, that $200,000 house may now be $400,000 house, may now be a $400,000 house. So important to keep in mind that yes, you may be taking on a higher loan, but in terms of your payments, you're always going to be approved for what you can actually spend. So if it is that, let's say you could, for that $200,000 home, you can only afford 1,500, right? Then fast forward when the homes go to 400,000, right? And let's say that mortgage is now 3,000. Well, your approval, while let's kind of ignore the fact that you probably got some raises and stuff like that, right? But your approval would stay at that 1,500. So what I will say is it matters from the sense of if you want that exact same house in that same location, then yes, there's a difference there. However, if you adjust, and that's where I was going next in terms of some of the emotional pieces of it, if you adjust the location, I think you'll find that you can find something equally as wonderful or better sometimes than the home that you were originally looking at, in just a different location. And when I say a different location, I don't mean a something that's below your standard or anything like that. It just may be less desirable in terms of, let's say that $200,000 house, for example, was in the city center. You may have to go, let's say in Tampa Bay area, maybe 30 minutes outside, 25 to 30 minutes outside of city center, but it's still workable. And so that's why I say it doesn't necessarily always matter. So that's one piece of things. So there's that logical side of it. But I'm leaning into some of the emotional side of it as well, right? So the emotional side of it, it's important to think to yourself, what is me continuing to rent doing for me and my psyche, right? So some of the reasons that people want to rent is you are looking to start to control one of your biggest costs, right? So as we all know, right? I was a renter once upon a time too. As we all know, every year or every term, usually it's a year, right? There is that constant fear of what am I going to do? Oh my gosh, what if the rent goes up? The rent may increase beyond what I can afford, and then I would have to move. And again, I'm kind of going to harken back to that early point where I said you may have to change locations. I'm going to have to move. These are some of the things that I hear often, right? And so, yes, I agree. You may have to move for the mortgage, but I submit to you that you may also have to move for the rental as well too. Another thing to keep in mind is always remember that the property that you're in, very likely, if you made a good purchase when you bought, and there's a lovely phrase that says you make your money when you buy, not when you sell, right? And I have another video that talks about some 10 reasons why your home isn't selling. So if you're interested in buying, you probably should watch that video as well, so that you'll keep some of these things in mind as you're selecting a property. But if you think about it from that perspective, what you'll realize is that you are able, Malika says she has not heard that phrase. Well, that's a yes. So that's a quick sidebar. I enjoy the comments. Thank you for the comments, everyone. So yeah, so Malika, yes, that's one of the phrases where people say you make your money when you buy, not when you sell. The reason why is if you select well, a lot of the times, and that's the point that I'm making, or that I was about to go into making, the home will increase in price, right, with time. So yeah, you make your money when you buy, you don't make your money when you sell. It's a phrase that we say. But yeah. Okay, wonderful, wonderful. Oh, thank you, Sustainable Staff. Thank you. I appreciate the love. I like it. Thank you so much. So yeah, so that's something that I submit to you that you consider, right? The fact that whether you're renting or you are not renting, you have your own mortgage. The renting side is costing you more because those increases are still going to force you to move outside. So that's one thing. Another thing that you should also keep in mind is when you purchase the property is very likely going to go up in value with time, right? Now, people always say, oh, yeah, the market can crash, blah, 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 blah. That is true, right? I'm not discounting that fact. But currently, we're still in a seller's market, right? At least in Tampa Bay, we are still in a seller's market. I know sometimes we see things and there's a salacious news article, but in Tampa Bay we are still in a seller's market, a bit more of a balanced seller's market than we were, say, January of 2021, but still a seller's market. So that home goes up in price. And you also now have to add in the fact that you've probably gotten a few raises, so you're able to survive with more money to play with, right? And also, there's going to be some sort of inflation that has taken place, right? That's part of why your house is going up as well, too, right? So if that's taken place, I started off, going back to that early example, I started off with a home that is $15,000, right, per month. That's the mortgage that I signed on to. And then fast forward, let's say I'm going to make it up. Let's say I had $5,000. I'm using round numbers. I had $5,000 a month that I was making back when I got that mortgage for $1,500. Well, now fast forward a couple of years, let's say you're making 6,000, or yeah, let's go with 6,000, right? 6,000 extra per month. So now things are becoming a little cheaper for you, is what you'll find, right? You are now able to secure that expense because your mortgage probably hasn't gone up very much. It'll go up a touch based on taxes, but in general, property taxes are usually in Tampa Bay, Florida, it's hard to estimate, but I would say somewhere around 2%, right, is what you can expect and plan for. There are some situations that can lower that amount or increase that amount. For example, Florida and Tampa Bay is a homestead state. So if you actually live in the home, the government takes lots, lots of care to make sure that you are not in a situation where your taxes get too high, your property taxes get too high. There's something called like the Florida Save Our Homes. There's different laws in effect to keep the property taxes low. Now they change when you sell, so just FYI, right? The prior person's property taxes may not be yours, but that is something that you'll see. So you're now making 6,000. Things have become a bit cheaper for you, and you were able to lock in this expense, right? So let's say 3 years later, or what I forget my original example. I said 2008. So 5 years later, the home is now worth the 400,000. You are now making more money, and you're just not as bothered by the changes, right? Because they've been small changes. And when I say small, let's say $25 per year, but you're making more, so it's okay. You're not bothered by it. So that's something that I think you really need to consider when it comes to renting. You are completely securing your greatest expense. You now can take that money and you can invest it. I see we have Brown Girls Trade 2, and I see we have Money Coach Malika. You ladies know all about the investing and the trading, right? So you now have some money to work with that you can use to make you more money instead of you giving that to your landlord. So yeah, so that's one point that I wish more people understood. So I see a couple comments. Let me take a look. So Brown Girls Trade 2 says, I tell people that renting is an expense, mortgages are a debt and can be paid down. But as you get older and your income earning potential goes down, mortgages can be paid off, expenses are ongoing. That is so very true. So, so very true. Absolutely. So in that example that I gave you, right, let's say you were at a point where you were looking to retire, right? You've now put $200,000 on a house. Let's say you've paid, I'm going to say you've paid half the mortgage off, right? And you, or it's 5 years, so you wouldn't have paid off half. Let's go simpler. Let's say you have that $200,000 house and you have paid $30,000 off of it, right? So you've paid off 30,000, right? So you're good there, and you have that mortgage for 170. You can sell the house for 400,000. So look at you. You just made yourself some money, right? And Brown Girls Trade 2, Money Coach Malika, Sustainable Steph, right? It's money that you can use for travel, for expat life, for spending time with the family, right? That's the reason why we invest in real estate. That is one of our reasons. So super, super important. So I'll quickly check my notes. Something else that I wanted to mention to you guys is that, so I mentioned about the largest expense, but one other thing that I think we also need to think about, there's an emotional piece of being able to personalize your own space. So many of us, right? You look behind me, my walls are light blue, right? I can paint the whole house light blue because light blue makes me happy, right? These aren't things that you can do when you don't own the space. Granted, you may get an accent wall or however they phrase it when it comes to apartment living, but you don't get that freedom that you get with your own home, right? When you see something's wrong within the home, you can customize it to make it however you'd like it to be instead of it needing to fit somebody else's requirement. You are also free to add on extra improvements. So maybe you don't like the, I'm going to make it up. You don't like the washing machine. You can then go out, buy your own, right? You can upgrade things. You're not in a situation where you have to pay more for something and it's not exactly customized to what you actually want, right? So it's really nice to be able to do a little bit of both. So that's another reason why I strongly suggest you get off the fence, right? And go forward with purchasing your home. The other thing, so one of the ones that you'll hear all the time is, well, way back when interest rates were 17%, right? So that is true, right? But I will also say that the same example that I give you in terms of that 200,000 and 500,000 and your salary being considered in that is the same thing that applies to that. So we hear that often. I don't necessarily think it's the strongest point, but I will say that that same scenario / situation applies today. They were cheaper before, they're now more expensive, but it does not mean that it's something you should avoid, right? Because at the end of the day, if you can make the decision to move because, the rent went up by $200, $300, double. There are so many numbers that I've heard lately. Then you can also make that decision to pay yourself first, right? Use the money that you have to make you more money, right? That loan is making you more money in the form of equity. And I also have a video as well on my channel. If you go to my playlists, right, you'll see one that says home tips in 3 minutes. And if you take a look there, I'm breaking it down for every letter of the alphabet. We're just talking about different home tips. If you look up E for equity, you will see that I'll show you a little bit about equity, how to calculate it. You're gaining equity, and that is so very important when it comes to home ownership. So yeah, so any questions or anything like that? I see, oh, sustainable stuff. We have a similar property tax protection system in California. I did not know that. Good to know. I think that's great. Yeah, the idea is pretty much if the example that they give us in real estate world is little old granny owns her home that is on the beach, right? And she has lived there for the last 45 years. When she purchased 45 years ago, it was her and a few other people, but nothing elaborate in terms of the houses on the block. Now, 45 years later, it's filled with mega mansions, right? Obviously, right? Naturally, the taxes and the property taxes and all of that would have gone up in that time over the 45 years. We want to make sure that Granny, who is making the same salary, is able to keep her property and is not forced to sell due to the property taxes. So Florida is very big on that. The homestead exemption is really key here, especially when you have so many properties that are, they're dream properties, right? They're on the water, they're beautiful, nice and sunny weather, that kind of thing. So yeah. All right, so Brown Girls Trade 2. I see I'm in a situation where I would like to refinance a mortgage that has PMI on it, but I'm retired with no official income and less rental income coming in. I'll be searching for refinance programs. Okay. Well, if you don't mind telling me, why do you want to refinance? I'm curious. What is the refinance doing for you? Is it solely to remove the PMI, or is there any other reason? And I'll pause a moment to see if you can let me know. Just curious to see if there are any. Sometimes it's not just the math, right? Sometimes there's a personal and emotional side that is equally important, right? Okay. All right. Let's give Brown Girls Trade 2 a moment. But yeah, so I hope that helps. I don't know if there are any other questions that you guys have. I'm going to wait around for Brown Girls Trade 2's question because I do want to continue the discussion. I'm enjoying it. But I just wanted to say, so for anybody who's out there, if you are looking to buy or sell a home inside Tampa Bay, feel free to book me. You can go to www.kellyknowstampabay.com and you will be able to find links there to book me. I am always ready to help, right? I specifically specialize in out-of-state buyers. You need someone who is going to have a keen eye for spotting issues when you aren't there yourself. You also need somebody who is going to work with you via technology, right? You also need somebody who's going to schedule things, when you're free. Those are all things that I offer. So I work with out-of-state buyers, and I also work with local sellers to make sure that everybody's having an experience that is filled with ease. And all right, so I see. Oh, Brown Girls Trade 2 said there must be a heck of a delay. Well, maybe I would not be surprised. I would not be surprised. But yeah, so all right. So Money Coach Malika says, I always tell my clients to focus on buying a home that's a good value. So very true. Absolutely. Because they can refinance later when rates go back down. So true. So true. And so many people did, right? So when the rates were, I know one personal friend of mine, he reached out because he saw the rate go down to 2.75 and he wanted to scoop up that 2.75% interest rate. So I cannot blame him, right? It was a great move. I referred him to one of my contacts and he was able to do so. So refinancing, hey, absolutely. There's nothing bad about it, right? buy the house that you can afford and is a great value. Totally agree with that. And affordability is super, super important, right? We never want anybody to be house poor. That is a thing. That's another real estate phrase, right? We want to make sure that you buy something that is according to your budget, that you can still live life while living in it, right? So yes, you can be in a wonderful house, but if you can't afford to go brunching with friends, we're big brunchers here in Tampa Bay, or take your dog to one of the dog spots, the dog bars. We're also big pet people here in Tampa Bay. Then you're probably not going to enjoy your life as much as you should, right? So quality of life is a big, big thing. So, all right, let's see. Let's see. Can I type? Absolutely, I can type the contact info into the chat. www.kellyknowstampabay.com. All right, there you go. Feel free to visit there, and on there you'll see links to book me. You'll be able to pick a time on my calendar that works for you. We'll hop on a video call and we'll talk just like this, right? Just me, myself, and you, your family, whoever's part of the purchasing decision, just, chopping it up, talking to each other. All right, I see some other comments. So, all right, I see we do a lot of brunching in Mexico as well. Oh yeah, I love brunching. I think breakfast is probably my favorite meal of the day. So I understand that. A good brunch fixes everything. All right. And do you have any thoughts about what will happen with rates in the near future? Ooh, good question, Money Coach Malika. So, I feel like I've gone back and forth on this. So initially, I had the opinion that they would keep going up. And I've been paying attention. I personally am a little bit of a finance nut sometimes. I think it relates to real estate quite a lot, right? So I think a smart realtor should be a little bit of a finance nut. But yeah, so I paid a good bit of attention to Jerome Powell. And I was also paying a lot of attention to, just seeing how inflation was going, right? Because I understand, the relationship between those, right? And for anybody who doesn't know, right? So higher inflation means you need to increase the interest rates so that money is more expensive for somebody to loan, and so that helps to lower your inflation rate, right? And so currently the USA, we have a high inflation rate, so therefore the Federal Reserve is increasing the interest rates. So I've been thinking that it would continue to go up. However, the recent changes in terms of the finance, or I should say more banking sector, right? We heard about, some of the Silicon Valley banks and stuff like that. I wonder just how much of an impact that's going to have on things. I also am now seeing some reports where people are starting to focus in on the commercial sector, right? So I just mentioned that, for example, Tampa Bay, the residential sector is still strong, still a seller's market, still doing well. Has it slowed down? It's more balanced, yes, but it's still doing well. There's no doubt about the fact that commercial is definitely a big question mark there, right? So commercial has not been doing as well for quite a while, commercial real estate, that is. So it'll be interesting to see how that, along with the banking sector, along with inflation, plays into the larger picture. So if I don't feel like I can as confidently as I would have said, say maybe 6 months ago, if we were having this discussion back in January, I probably would have gone, oh yeah, they're definitely going to continue going up, Malika. But now I'm not as sure. I feel like we're just going to have to kind of see what Powell does, and kind of keep paying attention to the job growth, the job market, what's happening there. I see some things that could go either way. So yeah, I wish I had a better answer, but hey, I guess if I knew the answer to that, right, I'd be in a different business, fortune telling. All right. I see some other questions. So let's see. Yes, commercial real estate is on shaky ground. Yes, yes, it is. Many people are still working from home, so offices are empty. Yes, exactly. And I was watching something the other day, and the person was saying that the work from home push, or the push back into the office from work from home, had to do with control, right? And I think that's fair. That's a fair call out, right? Because a lot of the jobs, as we learned during the pandemic, can be done from home. But I also think there's a financial piece to it as well, right? That I don't necessarily know if people talk about as much, right? So of course, there's lots of remote work. I do a lot of remote work myself, right? I'm sitting here talking to you inside my house. But yeah, I do think there's a financial piece to it that I'm interested to see if, with this push back into the office, will that be able to help commercial some, right? We'll find out. So yeah. All right. Let's see. Money Coach Malika, so true. Absolutely, completely agree with that. Yep, yep, yep. So true, Steph. And then thank you, that was good enough. Perfect. Yep, yep, yep. Good. Well, I'm glad I answered your questions. So we are at 7:30. I will just repeat one more time for the people at home. Thank you for watching the replay. I completely thought this was going to be, a 5-10 minute talk, and I'm glad that I had such great engagement and we ended up being able to make it 30 minutes. So I'm going to try to do this a bit more, right? I think it's great to engage with you guys and get some questions, and I've really enjoyed the discussion. Again, my name is Kelly Peart, and if you would like to book me, please go to www.kellyknowstampabay.com. I'm a local real estate broker here in Tampa, Florida, and I specialize in working with out-of-state buyers via virtual services, along with specializing in working with local sellers. So thank you so much again. It's been wonderful speaking with you guys. And again, don't forget, interest rates don't always matter. Take care, everybody. Bye.